Hi everyone, welcome to January 31st, important day, FOMC in about an hour. So could see some volatility today after that event and even tomorrow. So let's do a refresh here. Yeah, so the strongest sector for the day, at least from the ones that I'm tracking, is the solar, and that possibly due to a rebound in TLT. TLT moving up from the lows over here. So that actually is a healthy sign for growth stocks, and other than TAN, another sector that is highly receptible to rates is IWM. And interesting, IWM is a little bit down today, right under that 5-day, acting as resistance. So a move above that 5-day can possibly be bought in IWM with 5-day as support. MDY a close second with it down almost the same amount, 0.5%, and that also losing the 5-day a bit going into that the FOMC speech. So those would be kind of two things to track that are rate sensitive. I see that a lot of chatter around IWM, and whenever there is more chatter around a specific stock or a sector, there's usually more traps and just more like volatile action in that space. So if you want to play that but still be kind of protected against it, then I would prefer going through the MDY route. But anyhow, moving forward, we saw TLT. IYR is the real estate ETF. We could see today it was contesting with that top of this wedge, which is also could be a sort of a bull flag. So I'm just going to mark that top here for an alert. Remove this other one here. To just be notified if we do have a break of this flag here in IYR. So something to watch closely. Real estate, because it is also rate dependent. So XLV was interesting. You know, we had a couple of days ago, we had almost a breakdown, but it got caught up bought up and pushed higher in a very gappy type of way, which is people just, I feel like folks that stopped out, buyers that stopped out and wanted to be in the stock, kind of just rushing to get back in. And that kind of pushing into all-time highs. Let's just make sure this is all-time highs. Yeah, all-time highs. This morning, but that was kind of pushed down because of that FOMC. Today, just people don't want to have too much risk on their plate before such a big event. But XLV still looking healthy. XLU, so we had that rejection over here and still trying to contest with that. Some moving averages coming up above, so definitely not one of the stronger sectors. ITB, home construction, we are in a sideways pattern and just continuing that sideways pattern for now. We did have that bad earnings in ITB from DHI that pushed it down a bit, but so far still holding. XME is metals and mining. That looking a little bit more interesting here. Why did we mark this area? I'm trying to understand. There was the gap here. The previous highs here. And that gap is actually closed. Let's check on the hourly. Yeah, other than those previous highs, I mean, I don't see much volume in this area other than this gap close. So I'm actually going to remove this box. It doesn't mean much because the transactions you can see were fast. It went fast through this zone. There was not much consolidation. So this zone won't act as much of a support with price falling through. It did act as a support here because of that gap fill. But now that that is done, the price could move fast into that in this area until it reaches this top previous highs here at 53. So no support if you trade over here, unless it gets over the moving averages, then you can use the moving averages as support. But for now, if you say we're to enter a position in XME, a decent support would be about 5 points down, which is around 8% or so. So not the healthiest setup here. Oh, USD CAD. Let's just take a look. What happened? We tested this long-term trend line again today ahead of FOMC and found some buying support, but it has weakened off of this after this double top here, and so possibly just waiting to see how the FOMC rate decision goes. XBI, been kind of looking at this pretty closely. There's two things that are interesting here. One is this sort of a head and shoulders type of a pattern that is happening, and let's see what that shows us. So if we take this bottom here and take the top, this is pointing to somewhere around that 8250 level. So somewhere around that would where the head and shoulders is pointing to, and that is a point where buyers have found an area before to buy. Let's take a look at XBI again. 8250, does it mean anything? Let's try to find some confluence. 8250 would be on the daily, down here on the weekly. We're struggling at the top of the yearly value area. 8250. Not much confluence coming through other than that head and shoulders. So with just one data point, it's hard to go full position into that type of a trade. But so a weak assumption here, but the head and shoulders and that type of a bear flaggish type of consolidation, which it's used to doing before, so head and shoulders, bear flag, and then a break, and then bear flag, then break. So just kind of reading the characteristics of this sector, likes to flag and break. So to watch for a break of this flag, and even if you're a little bit late into the entry here, but would be a possible short trade to look at XBI for now. UUP, let's move back to the daily chart. So we had a gap down today with finding resistance here and had a gap down, but it got bought up again. Just waiting for FOMC results to come through and what the interest rate decisions are, and possibly when the first cut would be, what the plotter looks like, and what Powell thinks how the economy is doing and stuff. XLF kind of still moving up today, had a bit of a kind of an up move and rejection. We'll have to see how the day closes, but this still looks good till the top of the box here, at least before we start to see resistance coming through. Microcaps holding that 5-day, contesting with it from the downside, with it having a bit of a gap down and then buy back up. Again, in a crucial spot. You'll find that a lot of things just end up in a very crucial spot, critical spot ahead of key events. And that's just the nature of where buyers and sellers find their balance ahead of these events. XLP still chugging along and moving its way through. So there's the consumer staples moving its way through this previous sell area where sellers have committed. And so it just looks a little bit, just not as easy of a trade to me, with all this resistance coming through, which has just caused a sideways pattern for XLP. So being a little bit late to the trade and getting in around the 76 or even a little bit higher for a breakout in this would be a better risk to reward, as opposed to guessing where the sellers would come in for now. But a healthy look so far on the staples front. And we can see, like QQQ has been strong for the past year, and it's starting to cool down a bit, and we'll get to that in a bit. And letting some of these other sectors take charge, and which is a healthy sign of it's just a sign of a healthy market with the strength broadening out to other sectors. XLI industrials are still looking really good, and even after today's key or before key events, It's holding that 5-day and just kind of moving up slowly. IJT, another strong sector, small cap growth, still looking okay here, consolidating and holding. MDY, we had touched on before. It's losing the 5-day a bit, but very close to call. And we could from this double top pattern. I was trying to find divergence here, but I could not. So lower price and lower divergence, RSI. So no divergence here for now to give us more kind of confluence in our thesis that this wants to move higher. But for now, looking like healthy action in MDY. And to me, a better play than IWM, which just has too many eyes on it right now. XLB is materials, that also looking fine, but we have just a lot of moving averages contesting here, so we'd like to see a breakout of this range and then use this point as a possible stop out for your trade. IYT losing a bit of strength today, the past 2 days, first the 5-day and now coming down to the, I believe this is the 20-day. Still okay, still in a sideways type thing, but lost a bit of strength, and that's why I marked in yellow. IWM looking a little bit better, but kind of approaching that 5-day from the bottom here, but it is rate dependent, so we could see some movement end of day in IWM. IYZ, telecommunications, that is looking a bit weaker, and we had a gap down today. Has shown a lot of strength, gap down and contesting with that 5-day from the bottom. So the first signs for some weakness coming through, but that could quickly change end of day after the FOMC events. So actually tomorrow and day after's video, tomorrow is also a volatile day. The day after Fed is usually volatile as well. Day after would give us some sense of and balance of how things are shaping up and which sectors are taking charge. But it's good to see where the strength is for now as well. XRT is the retail ETF, and that is just in a sideways type pattern here. So not looking bad here, but we are below that 5-day. But that 5-day cross of the 20-day is a good sign. I would like to see that 20-day also starting to point up. Consumer discretionary lost that battle with the 200-day here. I believe this is the 200. No, actually, the 50. Yeah, lost a battle with the 50-day here and contesting with that. Possibly want to see one of the bigger weights here, Tesla, try to get through some of those overhead resistances, and that could push XLY above as well. S&P losing that 5-day today, had a gap down and sell so far. We'll see how the day closes. XLE as well, kind of coming back down, was getting a bit extended from the 5-day and back down to the 5-day here. QQQ, interesting with Google and Microsoft earnings yesterday, had a big gap down here. Now this forms an island in, let's see. So we were saying how there was a small island and that got negated with this move, but now we have a bigger island in QQQ. So there could be further weakness that comes through in QQQ. And that would be possibly healthy for the market to allow it to get to, just other sectors to take charge here. So a QQQ short would be in play unless, if you want to be super safe, then a 428 cross would be you're negating your island, or if you want to stop out a bit earlier, you can even stop out somewhere around the 424, 425 mark. A cross of that could negate your island reversal here. But until that gets taken out, a downside in QQQ looks possible. Same with SMH. We had an island and also kind of a head and shoulders here. And if we look on, let's just take a look on the hourly, what that looks like. So you can see a pretty clean head and shoulders here. And that points to a gap fill here at that 180 for SMH. We are at 186, so that is still about 6 points down on SMH. XLK, let's move back to the daily. also putting in that island reversal, and you can think of this whole big thing as an island as well now. So also showing some weakness. So I'm going to start marking these as red: XLK, SMH, and QQQ as possibly sectors that will start to underperform as predicted by the price action for now. And we'll keep an eye on that if there's any changes there. XLC down to yellow with it losing that 5-day here. So losing that kind of up strength, and I'm gonna have to see, maybe there was a earnings in this sector that caused this big gap down. I'm not aware of which stock that is, but that's something I'll try to get to you guys in the next video. KRE also a big gap down, possibly. This is regional banks, possibly due to the interest rate decision coming through. Okay, so I won't get into single stocks for now because of the volatility that will probably start in about 20 minutes or so, or about an hour, so half an hour into the speech. But we will do that review tomorrow and day after to see how the single stocks are acting and where the strength lies.